Can the market rally towards 7,400 in the year end? And should we be wary of the market wobbles that tend to happen in January? The man guiding us through is Gary Glover from Novus Capital. Good morning, Gary. How are you?
Yes and yes, I think. Is the answer to those two questions? Yeah.
Reading your report, it's like, well, it does look good going into it. And then you're going to tell us a bit about why those wobbles and what you've looked at to see where it comes from. So good, you've given us the answer yes or yes already. The rest will cover some indices, we'll cover your favorite trading shares for the week that you've pulled out. But the yes and yes, or do you want to tell us about the portfolio and how you've structured it off the back of those answers of yes and yes? You're expecting a rise, some wobbles into January. Is there anything that you've changed now that we're coming to the middle of December?
Not so much there. I'm starting to look a little bit ahead to next year, but probably important not to get too ahead of ourselves there. I think that we're still got a pretty bullish setup here from our index and also the US indices. So they're looking pretty firm here. So I think they're on track to finish the year sort of strong. Looking ahead next year, there's some fairly obvious sort of resistance sort of early in the year. So so I'd probably go as far as say that early January sort of peaks and fourth years and election years are very common, like maybe 85% common. So I just might put the first half of next year a little bit at risk there, but then the second half will be pretty firm. And then the following year will be even firmer, but just don't get ahead of ourselves here. I think we're still looking pretty robust here for year end here. So I still think the market can rally through to early January here. And there's nothing. I mean, the NASDAQ sort of broken to, I think it's gone to new highs. I think S&P's now sort of closed new highs. Dow went to new highs here. So they're all looking pretty firm here. Our index is sort of opened the shoulders a little bit the last couple of weeks, still a little bit underperforming versus the other indices, but still looking pretty robust as well.
Okay, so they're the indices. We're still well and truly below the overhead resistance, those recent highs, but you've noted the Dow Jones as well as the S&P and the NASDAQ are very much closing in on these highs that they had about 24 months ago, I should say. And 12 months ago was the lows in October that you pinpointed very well. If anybody wants to go back and watch your reports on that was amazing timing on that. And you were talking about what we've got on the charts here, and you've mentioned a few times before. On average, it's a 49% gain from these October lows through to December where we are. We're going to fall short of that this year, but you're saying coming in towards that, we still look towards seasonality. We tend to have, or patterns-wise, we tend to sort of reach that peak, and then there can be a bit of concern going into the first half of the year, can there?
Yeah, look, don't get ahead of ourselves there. I'll cover that maybe separately in the next couple of weeks there, but there is real strength into the end of this year, so and up into January as well. And technically we got these sort of bull flags here that are sort of set up, broken out. We got pretty good breadth sort of through the market there, so I think the market wants to rally here at the end of the year, Chris. So we just got to trade what's in front of us here. I think still looks pretty positive there. So I think we'll see some high levels there. I think the Dow's looking like it could go back and retest that high. I think the NASDAQ, I look at the perfect setup would be actually to go back and retest the high, but maybe just finish under the high, and then maybe just have a real treat the first half of next year, just under that high, maybe like a larger handle, like a big cup and handle, and then we push on sort of late in the year and then into 25, and then we really open the shoulders there. But again, don't get too far ahead of ourselves here, but I think at the short term here, I think we're going to head higher here. The S&P likely to retest 4,800. And I think that, the Dow's obviously, gone to a new high. So, so I think it'll go back and retest the old high there at 3,700. So that could go, potentially could go high there actually. So, but for our market there, I think the 7,400 level looks, that looks sort of formality here. We just haven't been as strong as the other indices. So, still sort of thinking about that level as a bit of a key level there, in the short term there with that overhead trend line as well. oftentimes you break those trend lines and you come back and retest them again. So, yeah.
Well, that's good insight into the next week, 2 weeks coming into the end of the year. If we move down to the next layer and have a look at the trading shares you put into this week's report, you have talked about some of the healthcare companies before and how they've been sort of grinding into a bit of a bottom. Sonic Healthcare is in the report this week. I'll just quickly touch on, for those who aren't familiar with the Fibonacci levels, you've got 100% up here and 0% down here, which is the range. And then these are Fibonacci levels marked as these percentages of the range. And those dotted lines carry across and become some sort of target. So how are you using those Fibonacci levels? But probably more importantly, what are you looking at in this part of the chart?
Yeah, just interesting. We've sort of come back to retest that low. That range has been pretty important there because you can sort of see that the 50% of that range to the early 2023 low was the last sort of swing high. So oftentimes the 50% of the range can make up a large portion of the trading band. So if you look at that early 2022 high there, around what 37.50, that sort of did a lot. Went 1, 2, 3 drives down. So that whole the first half was really quick, and then the second half was pretty slow. But that does mark the sort of fib range and gives it sort of extra validity, in my opinion, anyway. But since then, we've had a nice bounce, didn't go to the 50% level, and then come back, retested the low, had a higher low here, which is constructive. The key thing I like here is the last 2 weeks have had pretty strong volume, so they've actually been pretty robust. And we're just sort of starting to build here. First high, low. Now we've sort of got a new higher high in here. So, just starting to build here, which is sort of positive sign for it.
And there's definitely, as you said, that volume is critical because it's happening right down here at the bottom where it's less of one-way traffic that we saw on the way down, which had reasonable volume. It's dropped off a bit right at the lows. And then in this choppy congestion period, a bit of changing hands, a bit of bulls versus bears, but getting a bit of turnover, which, if I quote you, think from last week, you were saying volume tends to happen at 2 places, so the tops and bottoms, and is it accumulation of distribution? And given the 0 and the 100%, this fib range, one might speculate it could be more of accumulation than distribution.
Yeah, no, definitely. And also too, Chris, along the lines of the mentor report, we know that all the sister companies tend to do similar as well. So we know that CSL's had a pretty strong bounce here. ResMed's been building quite nicely. Just seeing it strong. I think ACL's had a nice pop here in the last week. Even Helios, the raising sort of done a little bit of strength. So the sector has been firming up here, starting a bit show a bit of strength. So that's good for the whole sector there.
Nice. The next one in the chart, different sector, different space, but one that you've covered very well and given us very good insights into how they raised during the COVID period. Flight Centre, FLT is the ticker. We're looking back at this chart. It's the weekly chart, and we can see from the fib range, you've got the top here, which is 23.50, and the low back in the October 22 lows, coinciding with the market, down here about 13.88. That range, if I echo what you were saying before, 50%, it came down, paused for a second, got through it, got to 61.8, reversed, came back to 38.2. So these kind of touches that we're talking about here, does this increase the validity of the Fibonacci in this kind of movement?
Yeah, look, they're not the be-all and end-all sort of here. Just important to overlap here, and if they coincide with the price action as well. But the key there is the last 4 weeks here, Chris, as well. So apart from bouncing off that fib level, we've sort of got up 2 weeks, and now we've pulled back 4 weeks, and there's just no selling in there. The volumes are really, really drying up, So sort of struggling to go down. I think the travel sector has been reasonably robust as well. The sector has shown a bit of strength there. So I think, Webjet, Qantas, corporate travel being pretty firm as well. So the sector is actually, showing a bit of resilience there, pretty strength there. So I think this looks pretty good here. Probably not the strongest one in the sector, to be honest with that, but has come back to, key level there. And, just struggling to go down here to me. So, so I think it looks pretty constructive here.
Nice. So going from travel back into healthcare, slightly different component of it, Ramsay Healthcare having a lot of hospitals internationally. This has been a long downward movement. They were a favourite at Darling almost 5-10 years ago now. $70 back, and now it's $48. making its way down. You've got the daily chart on the screen here. It's dropped down here, and then it's almost, well, what's going on here and what's the main attributes of this last 6 months that's caught your eye?
Yes, we've sort of got base building sort of characteristics here, Chris. So we've sort of got that washout low in August there. And then we've sort of been building there, sort of, we sort of got, had a couple of, sharp little bounces and retreats, and then another bounce and retreat. So sort of got a first high low, then we rallied, went to a new high, then pulled back deep in the range again. So if you look at sort of ResMed, that chart there, it's got about 3 or 4 high lows here. So Ramsay now has got a potential second high low here and quite a bit of time here. So sometimes these bases take a while to build. So just looks pretty constructive here. I like it here just because the risk reward's nice and tidy. So if we're buying sort of down near the low here with a stop just under the previous swing low, that's a pretty tight sort of risk there. And then our reward is, if it goes to a new high here, makes 54, that's pretty good upside. So our risk reward there is it's fantastic. And we've seen the volumes just increase in the last week or so here as well, around that low. So that's sort of showing possible accumulation again down those lows here. So yeah, look, sometimes these basing patterns can take a while to build here, but that's sort of constructive there.
One that you did show me earlier in the week, and I was quite amazed at just how tight it had coiled and compressed. You can see that it shot up. So coming from the October lows, once again, 550 press, but then shooting up very quickly, like you've said, elders tend to do. And then this compression, this is really tight. And characteristically for elders, is that super tight for them?
Yeah, so like a little BCP pattern. I mean, it's had that impulsive sort of rally after a positive update there. So market was expecting the worst, and then it wasn't so bad here. So the stocks had a pretty good move. Since then, the price tightened up, volumes are sort of tightened up here. So this looks pretty good here. I think we showed something like, maybe it might have been Dicker Data there previously, had a nice little impulsive rally up the low, then it went through a little tight congestion, and eventually sort of kicked on. So generally, when you have a little pause like this, the odds favour a break in the direction of the trend. So how it moves up into that pause. So we can see that this has obviously rallied into that little sideways move. So generally they break out in favour of the pause here. So that sort of favours upside here. So that looks pretty good as well. Again, like the Ramsay, Chris, you buy it here with a tight stop here under the last little swing low. You get a pretty tight, sort of risks there. And if it rallies here, it could rally pretty strongly again. Probably similar sort of size move into this pause. So again, another great risk reward sort of set up in my opinion as well. So look, we don't know which trades we're going to win on here, but if we've got a really high skew with our reward to our risk, that's pretty handy there, because we don't need to get too many right if we're getting a big reward at the end of the day. So that's why I like this one here.
Well, the type risk reward trades, very much a favourite of yours. Coles Group, different sector, climbing back up into the higher ranks of the market capitalisation. So one of the large companies on the ASX, very well known household brand, but this chart hasn't gone too far. So 2020, it's up, down. And how do you interpret what's happening here, and where do you see the opportunity?
So it reminds me of Combank, CSL, a lot of those sort of bigger cap stocks that have really been range bound here for the last 3 or 4 years. It's been up and down the range there. So, we're breaking to slight new highs and then breaking down at sort of marginal new lows there. So, in a range bound market like the 40s and 70s sort of style, which are high inflation type environments, this is quite normal in these sort of skewy markets, is that it's to sort of see these big moves in the shorter term, but longer term. So I think Coles has come back down and retested that old low, made a false break here. It's now got a sort of high low in place here, and you're starting to build here. So I think this is pretty constructive there. So I think 1650, maybe we can go a little higher, maybe 1750s on the cards here. So, typical of the current environment we're in. Big wide ranges there, and swinging back and forth here. So again, nice little risk reward down here too, Chris, as well. So I've already built up a bit of a 7% holding for my portfolio. But yeah, I think it looks pretty good.
Nice. Well, going into a different sector, back into the mining side of things, diversified miners, you talked about them last week and how they've been performing. If we look at this chart, this is, for a daily chart, this is one-way traffic, $16, down to $7.50.
Yeah, it's ugly chart there. I mean, the only thing that does sort of stand out there is the volume over the last 5 or 6 days. So it's definitely seeing that, always ask ourselves, when we see big volume like that, we got to ask ourselves, is it accumulation or distribution there? That's coming after a really, really big decline there. So $16 down to sort of $7.50 there. That's a fairly large decline there. So so it does look like accumulation sort of starting to take place here. I just had a little bit of timing there, Chris. Not that I'm bound by the timing cycles. They can come out wrong sometimes. Sometimes they don't work. I just sort of had a bit of timing there for the low there, which so far I've had a bit of a bounce off that level. I've got similar, I got S32, I think, PLS, AKE, Aluka, just a lot of stocks, sort of similar sort of, those sort of second tier sort of miners there have all come off quite dramatically there. Whereas, BHP, Rio, Fortescue, they're all roaring ahead here, almost at new highs there. So just a really dislocation there from the top tier to second tier sort of miners there. So I think there's some opportunities there within those sort of stocks there. So I've added a little bit of S32 and I've added a little bit of IGO here as well. So I think it looks pretty good.
In the mining space, we'll stay there for Pilbara mining, back to the lithium side of things. What's been happening there? Lithium's definitely something that dances to the beat of its own drum and can get really strong momentum trades behind it, which I've covered a fair bit of detail over the years. What's happened here? If we were talking about elders before, compressing and coiling.
Yeah, I think you just had a bit of a washout there with the PLS there. So look, not sure we've got the low in place here yet, but we are in a bit of a critical support zone. We've had that massive sort of, what's that little spring sort of low there, sort of white belt, sort of had that down test and then recovery there, big volume as well. So this is one here just to watch here over the next few weeks. I think if it sort of meanders back to sort of 350, maybe 340, doesn't do, the selling dries up here, this could be one to have a look at there. So the lithium sector is definitely on the nose at the moment, under a bit of damage there. He's looking a bit oversold here. Just need to see a bit more proof here. So this is one to just watch here. But some early signs there of positivity. And then, I guess the last one on the chart there is Aluka there, Chris, as well, which is, again, come back and retested that low. So got big volumes again down to the lows here. So possible accumulation taking place sort of down those lower edges. Just notice a little false break of the low. Does need to hold here, but possible little false break there. Again, probably I've added a small position there with a very tight stop here. With a downtrend like this, you got to keep it tight here because still a bit of risk there. We still need to see a bit more before we can be confident that's going to head back up again.
Oh, well, that's a good one to end on because it's a trading opportunity. You've talked about springs and false breaks, and they're definitely strategies that you have been trading quite successfully for a long time now. Is there any other things that you are observing coming into the year end? There's obviously the trading opportunities. You've talked about it. In your experience in the markets, when we come into December, we're about to tick over halfway. Christmas celebration season, lots of people start checking out. Are there any observations that you have for this time of year that can lead to trading opportunities?
Yeah, no, just probably starting to look ahead till next year. So next year's got a very strong pattern there, Chris, probably like 85%. So in terms of the fourth year sort of setup, sort of election year setup, just normal seasonal cycles, there's a really, really strong bias next year. Only the 60 year actually is diverging from everything else from the normal cycle. So that always throws me a little bit because I like 60 years, always one that's has been pretty reliable in recent years. It's the only one varying from the normal cycle here, but every other cycle there is almost in uniformity as to what's happening next year. And it kind of makes sense to me in terms of the marketplace as well. But we'll see. They'll see how we finish first. We won't get ahead of ourselves, but I think I'm not sure I'll do a full forecast for 2024, but I might just do I'll do sort of something up there with a bit of a review for next year. Just because at this stage there's obviously no certainty of these things, but it is looking like I guess the numbers are sort of 85% sort of the time they do a certain search. That's pretty good. So that's not bad. So it's sort of there's some years there where you sort of they're a lot harder to sort of read and forecast, but next year sort of definitely sort of got a very sort of strong sort of pattern to it. So and it's always an interesting year as well, because the election year for the US markets as well. So it can be quite a volatile year, the election year. So
Well, you do say that there are no certainties in trading, only probabilities. And for those who are new to Gary's sort of reports and haven't seen, Gary's done blueprints for years and years to what he sees in these patterns, how they may unfold, what he creates, the blueprint. And if you want, go back and really worthwhile having a look at the last 2 years, 3 years possibly now, because you've absolutely just pinpointed the highs and the lows. Those who have followed have really seen that Gary absolutely cleaned up in the last couple of years with finding the highs and lows and getting in and out of markets. Nonetheless, there's a whole playlist on the right-hand side of Gary's reports, and then also a whole series of patterns that Gary's talked about: springs, false breaks, BC purdies, and the like. They're on the right-hand side, and his X, or his Twitter handle, if you want to follow him there, is over on the left. Thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.